buzzing point of the day. We have seen the prices now hit $69 on the Brent, and 60 seems to be comfortably holding for the US crude oil prices also. So nearly a percentage point up, and the crude is building up on the kind of gains that we saw in the previous quarter, where US crude is up 27%, rather 32%, and the Brent is up by 27%. This has to do with the latest statements from US telling that oil traders and refiners to continue to decline their purchases from Venezuela, or they will face sanctions as well. And this also has to do with the US rig count, which is the lowest in a year now. That seems to be really working its way into the prices. Add to that the run-up in the global equity markets, the weak US dollar. That also led to a charm when we look at the commodity prices. But joining us now is Ms. Vin Mahesh on a phone line. Ms. Vin, hi, good to have you. What is your sense on the crude oil prices? Because 2019 highs is where we are trading right now. How much more upside are you expecting?
Hey, Manisha. I would say crude's in a consolidation phase for this quarter. I still think the general trend is on the upside. But the key thing, in my view, to watch out for, and you briefly alluded to it, is what happens to U.S. production from here. The rig count data that we're seeing right now is a response to where prices were 2 to 3 months before. So since then, obviously, we've had a price recovery, and I think we tend to work with lags in the oil market. And at this stage, both demand as well as U.S. shale is sort of responding to where prices were 2 to 3 months ago.
So how much of a further upside would you see? I mean, as you said, you are looking at some consolidation at these levels. There are various reports out on how the Brent could perhaps breach 70 and 75 as well as a spike. Do you see that kind of a scenario?
I think there will be some friction if it goes much above 75, especially from the U.S. administration, because we're headed into the U.S. driving season. Trump and his foreign policy experts do know that they've tightened the market with what they've done with Venezuela. So I think the side effect of that would be how easy they might go on Iran. And we're already starting to see signs of that, with several Indian refineries now asking the U.S. administration directly for waivers for Iran. So I think it's a two-sided coin. As much as the market tightens, it just makes things weaker for the second half of the year.
Also, until now, we have seen the supply cuts come in from the OPEC and Russia as an oil producer. The only concern has been about, one, the demand, and two, the U.S. output. With both these factors now turning around a bit, does that give some kind of an encouragement to the bulls?
I think if you look at positioning data, you're starting to see net money managers sort of building their length once again. But I'd say in terms of conviction, they haven't received full courage yet, partly because of what happened last year in terms of a lot of the length getting washed out because of the U-turn on Iranian sanctions. But I must say, on the macro side at the moment, the amount of policy support that we've got, whether it be the Fed being on hold on interest rates, ECB continuing to ease, what the People's Bank of China has done, a lot of that is starting to help the macro side. We've seen that in Chinese macroeconomic data that came out over the weekend. Things are starting to improve. I mean, things are starting to bottom out because of that policy effect that's come through. And I think that's one good thing that's been going on, holding on well for the oil markets. Demand has been holding on.
So while in this quarter gone by, that is, we have seen perhaps a $15 of a range in the crude oil prices. What is the kind of range? What is the kind of moves that you are expecting now for the new quarter?
For this quarter, I do think, as previously mentioned, consolidation would be something to look out for. Crude sort of consolidating closer to the $70 per barrel level. But the real impact on balances needs to be seen in the second half, where even with Venezuela, there's a lot of uncertainty. If the military starts to go towards the opposition, you could have a swift regime change, and production there could be in a whole different scenario to where it is right now. So I think quite a few wildcards for the second half of the year. But for now, for this quarter, I'd say consolidate towards the $70 per barrel mark.
The next quarter, then you expect the prices to surge, or you see them declining, because we will have the Iran sanction waivers also come up in the first week of May. The Venezuela sanction is yet another thing. How do you see that playing up? And then, of course, June would have the OPEC and the allies meeting.
Yeah, so the way I'm looking at those assumptions at the moment is, one, I think Iran will get waivers sort of extended for the second half of the year, partially, not completely. So the Iranian barrels will still flow through. Venezuela gets a lot harder, but second half of the year we see some upside because of policy or other regime change. But the key thing is U.S. production. I think there is quite a bit more shale that would come in than what's being factored in by markets at this stage. Demand I still expect to hold on, because the macro side, in my view, because of the policy supports, sort of holding quite well. So with all of these assumptions, I'd say crude goes back towards $60 a barrel, but doesn't go below that level.
All right, so 70 plus kind of levels in this quarter, but the second half could actually see some profit taking. Ms. Win, thank you so much for joining us with your sense on the global crude prices. Joining us also on the show now is Kishore Narne of Motilal Oswal. Kishore, hi, welcome. What is your sense on crude? Because what are runaways, what we've seen in this sector?
Yeah, I think, Manisha, looking at the recent volatility and the fundamentals on the backdrop of this, I think we should be looking at continuation of momentum as well over the short term, especially on the US rig count has gone down to the lowest number since, I think, April 2018 or so. So I think the underlying fundamentals are still bullish. Probably one can look to buy crude. In India, probably targets close to around 42.70, 42.90 could be possible. So short term is still bullish for crude.
You know, the major movers in the day-to-day, Kishore, have been the metal prices. After what we saw happen in the previous quarter, today just opened perfect with the US and China trade talks as a background, the China PMI manufacturing numbers as yet another big encouragement. Is this a knee-jerk reaction? Is this a one-off, or do you see the metal prices holding on?
I think, see, off late we have been on the positive territory. I think the momentum is still there. Again, as you rightly mentioned, the backdrop of US showing that sentiment that there could be a good deal between these two and the trade tensions could submerge eventually. I think that's one positive momentum which has been really hurting base metals earlier, has taken as it's passed on. And second is, as you mentioned again, Chinese factory activity data, I think that's again showing positive signs. So maybe that stimulus might be working there in China. So I think both the largest concerns in the base metal industry were that basically that China-US trade war, and the second is that China slowing down. I think both of them has had a positive surprises. So the momentum is expected to continue in copper. Anything close to 456, 457 could be the targets. In short term, one can look to buy close to around 451, and then 448 could be a stop loss for copper. But any dips are a good buy opportunity. So probably in a couple of days, it should be looking at 460, 462.
Kishore, I also want a slightly longer term view from you, because we've seen copper prices gain up by around 10% in the previous quarter. Do you see gains building on that? Do you see a repeat performance, especially now that we are dealing with better numbers?
I think until we see any major negative data points, especially on the Chinese economy or the macro front, I don't think the market would turn around anywhere somewhere close to here. So probably 474, 475 in domestic markets could see some kind of resistance. That's where most of the fundamentals data will be discounted well enough, and then market will be looking for fresh signals from there. Otherwise, I think the current momentum should take it to close to that levels.
Point taken. So a good market to look at. Thank you so much, Kishore, for joining us. That is the view coming in from Kishore Narne. Buy on crude, buy on metals as well. And the copper prices from these levels actually could show you 25 rupees of an upside for this quarter at least, is the view coming from him. But with that, that's all the time that we have on this edition of Closing Bell.